Hi, I'm Jeff Ong again from Dr. Wealth. Today, we're going to talk about the 5 biggest property investing mistakes you must avoid. But first, a disclaimer. So, what should you never do as a property investor? Number one, never cut corners when it comes to professional advice. Paying experts is not a cost. Experts will not only cover the cost of their fees, they will probably even make you or save you money. Now, there is a lot of experts that do not charge you advice, and free advice is often, in my point of view, not good, because I think everybody needs to be paid for their time and sharing their knowledge. Now, if they're giving it for you for free, then you must be wondering where they earn the money from, right? For free advice, the expert will only be paid when you transact something, which means that you must buy something for them to earn something, which is in a form of commission. Then in that case, the advice will often be steered towards making you make a transaction, which you could end up buying something that is overvalued, right? So I think the best form of advice is paid, right, per hour, or in terms of the cost of the transaction, or so whether or not you do anything, you buy anything, you get paid. The expert gets paid. Now, if that's the case, then the expert will give you pure advice, right? Pure education, without steering you towards a direction that he will earn, or he or she will earn that commission. So I think in Asia, the culture may be that we do not want to pay for advice or for consultancy, but I think it has to change. Okay. Don't do the learning on the job. Don't try to teach yourself or even self-study and then watch a few YouTube videos and then think that you're good at it. Property is an expensive game. If you buy the wrong asset class, you could be stuck with that property for 10 to 15 years, even 20 years. So you buy the wrong asset class, you buy a shiny new apartment when the locals only want to buy houses that have character, then you are in for the wrong thing. And then worse still, you buy an apartment that is overvalued and you don't know how to do a comparable study because you don't even know the website to compare against, then you're buying 20 to 30% premium, then you're never going to see profit for the next 7 years. It has happened, okay, oftentimes. So if you pay for an advisor to tell you or a mentor to guide you through it, then it could be a very expensive mistake that you made, right? I mean, 100,000 to even $500,000 more expensive than you should. And paying a couple of thousands for advice could prevent you from making these mistakes, and in fact set you on the right path that will make you millions of dollars. So a good mentor, a good advisor is really very important. So work with those experts, at least in the beginning, until you build your knowledge. So my first 10 years, I kept looking for experts, people to guide me, mentor me, and I paid a lot of money for advice to reach the stage where I am. Number 2, never fall in love with a deal. The best property advisors keep their impulse under control. In fact, you are like a poker face. You're playing a poker. You never show that you hate something or you like something. Never criticize a seller, a homeowner that's in front of you, right? So I will give my comments to the agent after viewing it, and always be prepared to walk away. And walking away is one of the best thing and most powerful thing that you can ever do. Okay, a good deal comes every now and then. Don't worry about missing the bus. If you're at a bus stop, you miss one bus, sooner or later there'll be another bus that's just as good or even better, right? So you don't have to hop on the bus, but you must take action. You can't be sitting on the bus stop forever, right? Experts focus on the numbers and fundamentals of the deal. Getting emotional with a deal can make you overpay for it. Now, oftentimes, if you go to a show flat or you view a house that you fall in love with, stop yourself, sleep over it, and start to take out the Excel and calculate your internal rate of return, calculate the ROI, just as I teach in my course, do a qualitative score to find out whether the details, the features of the house, the location from the city right down to the suburb location and the type of house is correct, and whether you're overpaying for it. If you don't, no matter how you feel after 1 or 2 nights, your emotions will stabilize and then you decide whether it's a good deal or not. 3, never get stressed out by what you can't control. Minimize your risks in property. I'm a big believer in taking out every kind of insurance possible. Okay, whether it be building insurance, content insurance in case there's a flood, rental guarantee insurance in case the tenant fails to pay. Thank goodness I've never got to have to activate any of the insurance, but it sure gives me a peace of mind. And I don't think they cost a lot, right? So you want to minimize your risk, you have to work with experts. They don't come cheap, but hey, a good expert is worth its weight in gold. Don't over leverage. Every deal has to be positive cash flow or at least neutral cash flow. With leverage, you don't want to own properties that suck, like them. I call them vampire properties, right? Only capital gains but negative cash flow. And then when you leverage, it becomes negative cash flow, and then you work for the property instead of the property working for you, right? If you don't want to leverage and pay full cash, then buy stocks or buy an ETF, and it's cheaper transaction cost and no headaches at all. So don't spend time worrying on silly things. Spend your time on other productive things, right? Number 4, now this is very important. Never get influenced by friends, family, and media. Friends and family have their best interests at heart, but they probably aren't property experts. How many times have I heard from well-meaning family members, parents saying, hey, don't own too many properties, it's so dangerous. Own 1 or 2 investment properties is good enough. Now, if you only have 1 investment property and your tenant loses a job and can't pay the rent, you now have to evict the tenant and you have 100% vacancy rate. If I have 13, 14 properties and that's like 50 rooms, so even during COVID, you have 10 rooms empty at some point. That's 80% occupancy rate, and you maintain positive cash flow even at the worst of times. And last year was really bad. Media don't necessarily have your best interests at heart. Media is full of stories about how quickly house prices are going up or down, and nothing's ever good or bad as it's made out to be by the media. Now, the purpose of media is to sell stories. Like last year, house prices are going to drop 35% and stock markets are down 36%, and it could fall even more. This is unprecedented. The word unprecedented is used how many times last year? The more bearish the news is, the more likelihood that it is time to open your wallets and buy. And boy, last year, I bought 2 houses and bought lots of stocks, and the rest is history, right? I'm up 50%. So even when the media is so bullish and everything is flowers and roses on the economy, maybe it's time to sell. And just as Warren Buffett said, be greedy when others are fearful and be fearful when others are greedy, right? So it applies. Now, oftentimes the media will interview someone that you have never heard it before, and that person is very bearish. Oh, the house prices is negative. Yeah, sometimes a broken clock can be right twice a day. So you have to see the track record of the person. If the person over the last 10 years on YouTube or one has always made the correct prediction, then that person is worth listening to, right? Number 5, never work without a clear strategy. The best property investors have defined goals and a clear strategy. The best property investors stay disciplined and not distracted by shiny new investments. So when I started out, there's so many places to buy. Okay, you can buy Singapore, you can buy landed properties, you could buy new condos, old apartments, you could buy offices, industrial. There's so many. What strategy do you want to adopt? Airbnb, rent to rent, service accommodation is the same. Abroad you can do that. Rent to rent is subleasing out a place to earn, and then you earn the spread. So you get a lower rent. You pay a lower rent to the owner, and then you rent it out by rooms. I'm not for Airbnb. I have done it before overseas, and when I have a good tenant, I hope that they stay for a long time, and I tend to take care of the tenant. And every time a good tenant leaves, my heart breaks, right? I really feel for the tenant. And of course, you look at the places, whether their house, whether there are any, things that are broken down. And if it's wear and tear, it's fine, right? I tend to close an eye, and I tend to have a lot of empathy because the tenant has been good, pay on time, look after the house in general. Now, imagine for Airbnb, you get a new tenant every three to 4 days or 2 days. Your heart jumps every time they leave. Oh, what's broken now? So it's not, for me, the wear and tear is just incredible. So you have to stick to a certain strategy. If you're doing industrial, make sure that it's positive cash flow and there's capital appreciation. And if you are investing abroad, make sure that you build that local knowledge in that few cities and build up a trusted team to work for you, building up that core group of people to work with you and the core knowledge. So summary of do nots. Do not cut corners on professional advice. Pay money for good advice to keep it objective. Don't fall in love with a deal. Be prepared to walk away. Don't get stressed out by what you can't control. Insurance is here to help you to cover almost every event. Please don't get influenced by friends, family, and media, especially if they are not in a position where you want to aspire to be, right? Number 5, do not work without a clear strategy. You must be very focused on a few strategies and keep doing it and become an expert. So if you want to find out more, sign up for my webinar. And this is Jeff Ong signing out.